Hey, my name's Kyle, and I created this channel because there's not a lot of deep research on small crypto projects. And the people who do really deep research, well, they don't really talk about the risks or the negative, really in an unbiased opinion. I really wanted to just have kind of a very data-based analysis of some of these projects to figure out what projects, could really do well and what projects might not, but not based on, hopium or any sort of hyping or pumping. Um, not trying to sell the profits you could make. Really looking at like the data and trying to figure out, will this company be successful? Is it a chain that has promise in the future? And then if it does pump, if it does gain a huge following, is it sustainable? Can this project last for the long term? And what we saw kind of in the last cycle where there are a few projects that did really well and they ended up sticking around, the Solanas of the world, the Cardanas, the a lot of projects that started small, Uniswap, um, these types of projects that actually ended up having utility and a good business case. These projects not only did well in the bull run, but they stuck around. They're still here and they're still relevant. And now there's more, because there's already a foundation of tools, because there's already you know kind of the base layers, right? There's more things to build inside of crypto and blockchains. There are more solutions that are going to come around on this site in this cycle that are actually going to be useful businesses. Whether that's some sort of new wallets, whether it's just some sort of social change, maybe even a new layer one that solves the trilemma, right? There's a bunch of different problems that need to be solved because of the success that the crypto markets and blockchain businesses had in the last bull cycle. So I think there's a lot of opportunity, but I think this time it's different, right? It's a lot of chains aren't going to do as well because they have a roadmap. You need more than a roadmap and some marketing this time. You need an actual business case. And the businesses that are going to do, or the blockchains are going to do well, are going to be able to produce, they're going to produce revenue. They're going to have a good product. Ideally, they'll have a unique market or a unique product to fit the market, and they also have to be able to execute. So that's why I created this channel, and I think I hope you find a lot of value out of it. And let's jump into our first one. We're gonna look at DESO, which is short for decentralized socials. I put together a couple score factors, and we'll review those as well as the market cap that this project um, could end up getting to. So, give me a second here, and I'll share my screen with you. All right, so it looks like so DESO's it's fully built out. They've got a bunch of big VC backers. Andrew Huison, I believe it's Coinbase, and then also Sequoia Capital, which is a massive VC firm out of San Francisco. If you haven't heard of them, they've invested in a lot of big tech companies and angel investor in a ton of firms that have done well. Go look them up, and you'll recognize a lot of the names that they've backed in the past. So some of the catalysts that this project has, it's not mentioned here, but they already have they already have a website, a team that's executed. They have over 100 apps engaged on it. It's a layer one project, so layer ones are interesting because they have much more upside potential than um, than other projects like a layer two or some sort of I guess layer two still have big upside, but like a D app or something that lives on top of another chain, right? Um, just because it gives the opportunity for other developers to come in and build on top of the chain. So think about it like an app store, right? Like Apple's app store or Android's app store. That gives, or even the device, right? The iOS, the iPhone, um, or the or any of the Google phones, right? It gives a platform for developers to come in and build on top of, and then Google gets additional ad revenue. iOS, Apple gets what 30% of profits from companies that that developers apps that they build on the in the app store, right? So gives an additional channel for revenue, and basically that just increases the value without DESO having to build out, or the layer one having to build out any sort of additional team. They do have to provide some support for these projects, but it's minimal compared to the labor and the work needed to build the actual application and maintain it. So let's get a drink of water. Like I said, major VC backed history of execution. The execution does look actually quite impressive with having 100 apps built out on it. They have a pretty solid roadmap. Their docs are very well built. Their roadmap, they've hit the objectives, so that's a great sign when they've hit the objectives on their roadmap. Shows that they can execute and they do what they say. Uh, the token has an extremely low supply, which means it's not going to take much interest in the project to get price and market cap to increase. Um, there's also and then also the founders or whale is not going to be able to loot the project. Uh, they have significant adoption. They have over 4 million wallets on the chain, and this includes users of all those 100 apps they have on the layer one. They also allow creators to monetize their brand through creator coins. So a little back story on this. They have um, a Twitter competitor. Basically, it looks a lot like Twitter, behaves similar to Twitter, and their thought behind this is to increase the interest or increase the number of creators they get on the platform. They're trying to incentivize creators to come on the platform and produce content and use the platform and draw in their audience. So the way they do that is they think if they're able to reward the creators, instead of giving them just a share of advertising revenue, they give them basically a share of the transaction costs, right? So every time you post or comment, it's like 1/10,000th of a penny or something, and a percentage of that goes to the creators. They also have the ability for creators to create their own coins, so you can invest in your favorite creator's brand. So just imagine like investing in like Taylor Swift's coin, right? Like that would be massive. And I could see how creators would like this and would come on the platform because of it. But there's still a question about adoption. Uh, in Q5, they're adding 5 more tier 1 exchanges, including Binance, and I believe Qcoin is one of the other ones. And then Q4, they're um, trying to they're going to deploy a D app that allows for file storage. So like competing with a Dropbox. That's pretty interesting. There's a bunch of others out there too, right? That do the same thing like file storage or Filecoin. Um, and that's the one thing about this listing the challenges here. Like there are a lot of apps they built on their chain that they're basically copycats of others. But like on the flip side, if you want a counter argument to that, they do have a great history of execution and a really good team. So, and with the backing of their backing has a lot of experience and a lot of resources. They could definitely help their D apps and basically their developers. Point them in the right direction, give them guidance on how to develop features that would help them be more successful. So you could see a case where where they do win in some of these categories. The other thing is they have, over 100 apps. They don't need, they don't need more than one or two to really take off, right? To really contribute to the community there, right? To really increase the usage of their blockchain. So the other thing is their Twitter platform. It looks like they have about only 12,800 daily active users. That's pretty low, but also if you look at the broader, you know, market of socials, at least they've got something, and they do have people that actively engage. Thinking about some other similar type of new social platforms. You got Rumble, who first time I looked at Rumble, they had like no content. So they have, Rumble has proven there is a market for people who don't want to be censored, and they were able to grow their market share significantly. I think they've done a lot of incentivizing creators to come on the platform, and like Russell Brand's one. I think there are a couple other news organizations that they've kind of paid to put their content on Rumble, and maybe DESO could do something similar. They do label themselves as a censorship free platform. Based on their documentation, they want to act like a pre Facebook when it comes to moderation. So obviously moderate the really bad content, right? The hateful content, but allow people to post. And I also don't know how that moderation would work. I don't think they went too much into specifics on it, but they do want to support a pretty open internet and open social platform. So I think that's working in their favor. They did say their token is inflationary in the short term. So this project's like 3 years old, and this was an older piece of documentation. I'm not sure where that fits. Uh, it doesn't look like it's too inflationary, and to be honest, they could give up some inflation and still have a really limited supply. So I don't think that would hurt them too much. They have something like 98 or 99% circulating supply. So there's not too much tokens sitting around. And then let's see, yeah, like I mentioned, many are duplicate services. They do have a bottleneck coming up, around 75 million users, and that's compared to the posting um, frequency of Twitter users. Assuming that people are as active on DESO as they are on Twitter. And they do have some solutions in their roadmap to solve that, so it's not a big concern. So if you look down below, I went through a couple scenarios of just kind of trying to underwrite them since they do have revenue coming in. So this current column here, this is just listing like what their current stats are. So they're reporting on their DESO scan page. Um, they're reporting 4 million wallets, about 105 transactions monthly. Do some math, get like number of transactions per wallet. That's 0.026 per month. And then let's see, the participation rate of the wallets is pretty small. So I think there's some upside there. As the platform, social platform grows, people are going to be more engaged in it just because there's more content to engage with. And then also, obviously, they've got some room to increase the number of wallets or number of users. So if we extrapolate that out and see what it might look like, um, in the future. Well, actually, let's just look at like what does that look like now in revenue for them. So they've got looks like they've got about $1,200 worth of revenue, because each transaction the fee is 0.000012 pennies. So it doesn't cost a lot to make a post or to comment on somebody's post, which is good. but that only comes out to about $15,000 revenue a year. And that's pretty small. That's really small. Um, I think it's part of the reason why these social platforms in crypto get hit pretty hard. They get dinged when it comes to market valuations. But like with a huge user base, that could increase significantly, right? Um, so that's what we'll look at here. We've got if they increase to, let's say, so Twitter has, well, it's a couple hundred million users, right? If we say that, I think it's like 600 million plus. That might be an old stat I saw, but let's just assume it's around like 700 for Twitter. So if DESO is able to scale to like 100 million wallets, assume like a percentage of those are dev wallets, and then a small percentage. So most of those are users. Uh, the number of transactions they do would grow significantly, right, to like billions, hundreds of billions. And assuming, like I said, that people post more, people comment more, they're more engaged in the platform. This is just kind of looking at their Twitter product because that's the main one. And if they do that, they could about like a 4%, say 4.5% participation rate. 4.5% of users log on and make a post every day. That'd be pretty good, right? I think Twitter's up around the 20s, so 20s or 30s. Um, so that would get them at about look at that, $19 million of revenue a year. And then here I'm assuming a multiplier of about 100, and that's just because if you look at the bull market last cycle in crypto, they kind of ranged everywhere from like 25 times to up to 300 times of revenue, and that's in the top part of the cycle, right? When everyone's super bullish. So taking a conservative estimate here, about 100 at the top part of the bull cycle. Obviously, those multipliers shrink as the bear market set in, but we'll just look at the top bull case right now. That puts you at just about $2 billion market cap, just based on their Twitter product alone, their Twitter copycat. Now, if we look at top adoption, let's say they somehow grow to 300 million users. Now, I don't think this is happening overnight, right? Like this would be like a couple year case to build the 300, right? We're probably looking at 2-3 years to get there. But even so, it's good to look at, just understand what it would look like if they got there. We're looking at 2.4 million trillion transactions a month. Uh, Increase user engagement. So assuming every user would make a post or comment on something about 8 times a month on average. Um, Probably a little high, but we'll run with it. Daily active users about 80 million, probably a little high too. That's why this is the bull case. And then revenue per month would be like $28 million. A lot of that's going, some of that's going back to the the creators, a small percentage. Um, but $340 million a year. So at 100 times multiplier, that's about $34 billion. And I don't think this is very likely, but I think it's a good way to kind of look at what the platform could do. So let's it for the underrating. Let's look at like the scoring I put together. So the scoring I put together, the bars. Let's go over to the asset list. So we'll just highlight this. So current market cap's about 300 million as of April 13th, and the low multiplier estimate is kind of based off what the market caps might look like. So low market cap estimate's about 2 billion, like we just reviewed, for this bull cycle. High estimate, I think, would be about $40 billion. I mean, that's rivaling, some of the comps I compared it to are Solana and uh, Cardano. Tron is a new one who they said they wanted to do social media stuff, but I don't see any actual evidence they've done any. Anyway, regardless, those platforms got those blockchains got around like up to 80 billion during the last bull cycle, and those are layer ones, so I think they're comparable, but they're financial layer ones, so the fees that they're collecting are going to be a lot higher than what like a social platform like DESO can justify. Now, DESO does have a DeFi uh, D app, so it is possible that that could gain some traction. But I believe their main unique product that's going to differentiate them is the Twitter, the social platform. So it could be the case that something else kind of one of their other projects is much more popular, but I think that's the one that's going to gain the most popularity. So we're making that assumption, and these cap rates are kind of based on that assumption, with some contributing revenue from uh, some of the other D apps they have on their layer one. The low multiplier estimate uh, works out to 6.7 times. Top of the bull market, forget the 2 billion. High multiplier estimate, which I think is really, really bullish, and I don't see it as likely. That would be like 133 times, and then that'd be a price of 190 on the low side, and almost 4,000 on the high side. And one of the things I think that is actually hurting Deso here is if it does gain significant popularity, a lot of retail investors aren't going to have an appetite for a coin that's over $1,000. And I think Bitcoin's different. It's got a much different narrative, and it's going to take a while for people to justify a $1,000 uh, social coin, right? I I think it's one of their impediments. That's not going to stop people. I don't think it's going to stop people from everyone from buying, right? If people see the value in it, and user base grows quickly, and their favorite creators are using the platform, I think people will justify it, but it will definitely turn retail off, at least in the short term, like next 6 months to a year, if it does get that high. So, and look, there's always a chance that, like, I've got this valuation of 2 billion, but there's a high chance that we never get there, right? I mean, there's even though they've got great backers, there's no guarantees in crypto. So don't that's one thing I want to make sure you guys know is, like, don't use this as gospel. Use it as information, and this data that I provide is for you to digest and decide, like, hey, think for yourself. Be like, hey, Kyle, I think your 2 billion is way too high. I think it's going to be like 500 million max. Or maybe you think it's higher, but, like, don't use this as your guide, because, like, I'm just a dude. I could be wrong, but at least now you have a lot of information behind the project, kind of what they're doing, and you can make your own judgment. I'm sure I didn't cover everything that you would want to know to make an investment in this project. So, after you watch this video, go do your own research and fill in the gaps. If you find information that you don't like, by all means, please um, put your money somewhere else where you think it's better spent. Um, so I put together some scores based on uh, quantitative data that like each blockchain provides, and because these projects are so young and so new, it's really tough sometimes to get all the information. So not only do I have three scores here to kind of gauge different components of the project, I also have missing inputs here, which the missing inputs is like, how many data points could I not collect or could I not find? And Deso is really good because they've been around for a while, and they have a really good team. They've got really good backers. There's a lot of information out there on them, and I was able to find most of the information I needed. So I did, this is my first video, but like the fourth or fifth coin I've done this research on and scored. And when I put together the model, I had no intention of a coin ever scoring above 100%. Like, I I put some multipliers in there, some bonus points, because I think there are certain things that a project might have that will set it up for success more than others, or allow it to grow more than others. So that's speculative potential here, right? Like it has some unique properties that give it the opportunity to grow quickly. That doesn't necessarily mean it will, but it's just kind of opportunity. I mean, if you ever took like physics, potential energy versus kinetic energy, right? Like it's like you're holding a barbell, right? Like a kettlebell, just say kettlebell, on the roof of like a 10-story building. It's got a lot of potential energy until I drop it, right? And then I drop it, turns into kinetic energy. So that's the potential to move very far, but that doesn't mean it will. I could just take the kettlebell away from the edge and put it on the floor in the building, right? And then nothing happened. That potential energy did not turn into kinetic energy. But anyway, done with the nerd shit. The staying power is that's the measure of, like what's the chance that this thing will stick around, and you got to keep in mind, like it's measured against crypto projects. It's not measured like a blue chip in the stock market, right? Like Microsoft's not going away, but any crypto could go away. I mean, look, Uniswap just got hit with some a suit from the SEC, right? They're being investigated by the SEC. So that came out of nowhere. No one expected that. So, and there's all sorts of other things that could keep DESO from being successful, right? Or any crypto for that matter. It doesn't you see it all the time, right? Like Terra Luna was one of the golden childs of the last crypto bull market. But they went up in flames. FTX is another good example. And and FTX was very well connected, had a lot of good backers, and it still blew up, right? So staying power is measured in proportion to the market we're in. So 100% is very good. It just means that they have really good backing. They're well financially backed. They've got good experience in their backers. Their team seems solid. They execute really well. All the things you'd want to see in in a good business, but doesn't mean it's safe whatsoever. And also, if you look at the price action of their of their uh, of their coin over since they launched it, I think it was back in 21, 22. It's performed very well through the bull market, right? Like definitely lost a lot of value, but it was traded. You could tell it was used, and it didn't go into irrelevancy. So it's got potential, and then reputation. It just goes back to their backers and their team, right? And things that they do on their chain, and not a lot of red flags there. Of course, there could be, but they could always be there. But it looks good, at least from the data that I was able to find. So anyway, that's it. Thank you for watching, and please let me know in the comments what you think about DESO. Any information you think I missed, or you know, also feel free to let me know what else you might want me to look at. And just a warning: I'm not going to look at meme coins. They're just quick pump and dumps, and I don't think they have any sort of long-term staying power. So, um, always interested in looking at new projects, and I'll dive deep in them, throw my model, and we can look at what we think. Thanks again.